Hello again, everybody. It's Harry Boxer, the technical trader at thetechtrader.com. It's Saturday, the 23rd of September. This is the weekend webinar. Well, as I say just about every week in the last 3-4 months, it's been another critical week for the market, but this time on the downside. If you take a look at the last 4 days, the market did not do well. We broke 4,440, 44.35 in this area and abruptly dropped 120 points in the last 4 days. If you take a look at the negative and close it near the lows for the session and the week, actually the lows for the month, the market is now actually technically closed below the trend, below the neckline of what looks like possibly some sort of topping pattern. I won't call it a head and shoulders, but it might be with a left shoulder head, double right shoulder, double left shoulder, but it's not really important. The bottom line is if it's a topping pattern and we've broken, we have some downside work to do. Initial support is about 42.63. That's a good 57 points below here. We could quickly see that early next week. And there's a trend line in between. So let's just say that if we get down in that zone and bounce and fail in that area, then we really go lower. And that's the problem with this market. We have not broken the major trend line on the S&P yet, but lateral price support absolutely in jeopardy. The Nasdaq 100, similar, but hasn't broken yet. What I want to see is, can this take out 14,555 in that area? And you can see the trend line has been broken, as opposed to the S&P trend line not broken yet. The overall pattern does appear to be a coil or wedge that was broken. If you take a look at the long-term trend, this is a triple bottom with a 1, 2, and a long 3, and this could be 4. So that's why I was looking for potentially a fifth wave. And if we don't crack down, or we just have a nominal break in this area and then rally back, we could still see a big fifth wave. But my problem is what I'm seeing looks pretty toppy. Left shoulder, head, right shoulder, indeed a possibility. And a break from a neckline could cause for at least a drop into 13.7 range, in my opinion, which means 700 points down from here on the NDX. Transportation index has been in a downtrend since July. 1, 2, and this is a weak 3/4, the fourth wave in a falling flag type pattern, showing extreme weakness. Also, Friday's close was the lowest close we've seen since June for the transportation index. With lateral price resistance and trend line coming in around 14.6, that may very well get tested short term. So my perfect scenario would be for the market to take a hit, mini crash, whatever you want to call it, and then come off some key support and rebound. But we'll see if there's a cycle low upon us or not. Small caps are getting pounded. Take a look at this. 6 days in a row down, and 12 out of 14. So in the last 3 weeks, on two updates for small caps. If you look at the index, the way I've drawn the parallel channel, it looks like 1, 2, 3. So there is some room to bounce. But there's also room to accelerate the major rising little channel here. Support about 173. So yeah, 3.5 points to the downside could take place quickly, and then I'd be looking for a bounce. But neither of these indexes are bullish. Short-term oversold, probably, but let's take a look at that. The McClellan oscillator now is minus 114 range. You all know very well from my constant talk about it that the oscillator needs to get to 250 at least in that area. And historically, we've seen huge drops here. In October of 22, just a year ago, minus 258. Here's minus 252. Minus 233. If you go back even further, some big drops in the minus 400 range. So, but since 2012, so 11 years, we haven't had a McClellan oscillator below, say, about 275.80. In any case, where we're at now is not extremely oversold. It's getting there. The percentage of stocks above their 40 has really dropped off. Now, only 1 out of 4 stocks was above the 40, which indicates bear market action, doesn't it? And the pattern, even though you don't chart this that way, shows a 1, 2, 3 down. We could easily get down to in the mid-teens or less in terms of the percentage of stocks above their 40 before we reach a climax. So something ahead of us, perhaps, and they may be very short term as well. Even the VIX is starting to pick it up a little bit. Nice little spike from 13 to about 17.5. But still, by historic standards, this is nowhere near fear extremes, which would be up in at least the 30s, maybe even higher than that. Take a look where we were at back in here, 80 range. I'll take something in the 30 to 35, 40 range on an extreme spike. If we get the any kind of plunge or mini crash, we should see this at least spike into the mid to high 20s. So that's not an extreme yet. Neither is the percentage of stocks above their 40 or the McClellan oscillator. So indeed, the market is set up for a hit here. I don't know if we get one, but we'll see. It could be treacherous next week. Fasten your seatbelts. Okay, look at the big boys and you'll see what I mean. This is why the market's dangerous. Look at Apple. So Apple had a big uptrend, came down with a breakaway gap and it rallied right to that gap, filled it, almost filled it, and then plunged. If you look real closely, the pullback and now this bear flag in here is very dangerous. Minimum target would be 170, but if it plunges through that, we could see something in the 157.60 zone quickly. And if that happens, you know the market's going to be hammered. Amazon, this looks really bad. We've had a really nice uptrend. Let's take an Amazon from 84 to 146. But the 1, 2, 3, 7 days in a row down, including a breakaway gap under the 50, and now under a double bottom, shows Amazon at the lowest level since the beginning of August. It's a 7-week low, and it could very easily plunge in here. I don't know if Amazon's going to do that, but I can see some support perhaps down here about 120.22. So we can see Amazon come down pretty quickly too. Google, well, Google was looking like one of the best on the board, but it's come right down to the 50 and the trend line. You break here and you'll test 127. Below that, we have a big problem. Below 127, it's only 4 points from here. We could plunge to 116.18 range, and maybe more. So Google dangerous. It's right on support. Hey, folks, you know these are also at oversold intraday, short-term levels, I should say, not intraday. And we could bounce right from the get-go. My preference would be a plunge first and then turn around. But I just don't know what you're going to get. Netflix. That is a left shoulder ahead, right shoulder. There's a rising wedge that failed at resistance at the shoulder line and a hard down. Just since September 11th, 2 weeks, 450 to 379. 70 points, folks, straight down. Resistance now, 398, 400. Next target, 355, right here. We go into plunge mode, wouldn't be shocked to see 325.28. The trend line's been broken. This goes back a year and a half. So we're in bearish mode in Netflix. We have been. Meta is somewhat stronger than most, and you can see how it's held. But should Meta quickly take out 292.3, early next week, we could plunge to 275.78. Nvidia. Market darling. Been slow and steady, but it's coming down, and it's come down from a double top around just under 500, and it got down to 409. So this has gone down 90 points in 3 weeks, and there's a double bottom here that's critical in my opinion at 403. You plunge through that, you're looking at 268.75 range. It wouldn't shock me if we did that, but that would mean we were in the dire straits for the market, in my opinion. As Nvidia and Tesla have been leading the way. Now here's Tesla as well. Look at the plunge on Friday. This is a crack key support. Price, moving average, and trend line support all taken out Friday as it plunged 11.54 or 4.5%. You got right down to the late August, early September support for 242 and closed at 244. If this gaps down or plunges lower, first target is at 230, second target is 220. And if we do that, we're breaking the major trend line that goes back to January. So stay tuned. These are all poised, but oversold short term. We could get a bounce. If that bounce is weak, we should go short because the market could be very vulnerable for a couple of days or a couple of weeks even. Let's move on. That was a look at the indices, the Nasdaq generals, the underlying technicals. We have a lot more ETFs to show you. Here's the semiconductors, which usually lead the market. And check this out. This is basically a 1, 2, 3, 4, 5. Fifth wave, head and shoulder top. Semiconductors break down Thursday, try to bounce Friday, don't do much. This one shows me vulnerability to at least 135.6 right there. Maybe as low as 132.3. Let's just say 134.36 would be my target zone. It plunged through that and the market falls apart. Financials have never been strong since the banking crisis back in earlier in the year, March, and you can see how this is a bear flag. We broke. Look where the thing's closed. Right on support. You break here and you're going to see a quick hit to 57 and maybe even test that double triple bottom area at 53. That's where we're at with financials. Could they lead the way down? Notice the moving averages rolled over, crossing over. Very bearish, very bearish. Another thing to consider would be this line, kind of a parallel trend line. So I'm looking for a move down to 57.89 zone. And on the biotechs, they have really been weak. Look at this. Several weeks ago, I mentioned the fact that we had 1, 2, 3, 4, 5 waves up, kind of a head and shoulders. We failed here at the moving average and rolled over. This is a 1, 2, 3, 4. I also showed you that bear flag. Said biotechs look vulnerable. Notice they couldn't get back to the moving average as a trend line. Rolled over hard. Retesting the lows from March. I think biotechs are attractive here. When I say that, I mean there's 5 waves down in that support. If we can plunge through that, you may set up a panic mode and spike this down. Now you can go back a long way here and you can see that the next support is the double bottom way down here at 62. From 73, that's a plunge city, folks. So little leeway here in that the XBI low is 72.5. We closed 73.31, but a follow through to the downside could send the biotechs into plunge mode. As you can see, semiconductors, financials, and biotechs look horrible. Only saving grace is 5 waves down on the XBI at support, but doesn't mean it can't crack. So if I'm presenting a negative picture to you guys, it's because that's reality. That's where we're at. Also, you always have to consider it's the end of September. The September-October period historically has been important market sell-offs but bottoms at the same time. What you're going to see today when I go through my other, go through the list of longs is that there are upwards of 100 stocks that look phenomenal still despite the market. And the relative strength always should be recognized because the stocks that do the best in a bearish mode, bearish market, are always the one that do the best when the market turns around. So keep an eye on the stocks that you're seeing today that I'm going to show you. And by the way, that list was about 140 stocks and I cut it down to under 100. So there's more than 100 stocks now that look really good to me. But my short list has expanded dramatically too, and you'll see that later. Let's finish up with the ETFs. You saw those. Now we also follow oil. You know, oil's gone from 68 a barrel to 93 some odd a barrel, and you can see it at the pump. I believe it or not, in LA, I paid $6.89 for high test yesterday. I'll shock some people back east because that's what it is out here with the stupid taxes. That California Governor Newsom is responsible for my opinion. All right, so here's the base breakout flag, pop, and another flag developing. Now it may come that this has to go sideways for another week or two, but eventually 85, 90, 92, very doable, I think, in USO. Oil looks higher, and you're going to see some oil stocks that I'm going to present today that look pretty good too. You see all the same. They're kind of sister ETFs. I'll be watching Gush, because if that occurs, and look at the Gush pull down, this is kind of interesting. Very sensitive to any pullback in oil, etc. But take a look at that. You're near a really key support area. Despite the trend line breaks, something to watch, especially with this and that moving the way it is. We'll see. Natural gas, well, it looked like it was going up, but certainly it's pulled back. It got near $3 from about, if you remember, we were down about 210 to 215, and we got up to 290 some odd, 298 on nat gas. So that's the reason why the onion boil did so well. But even then, look at the choppiness in this ETF. So it's telling me still that, and this has made a new multi-month low recently, while cold, which is the VAR ETF for nat gas, has just broken out on Thursday, a little inside day Friday, but the key for this one is getting to 68. Gold, I don't know. Again, I keep saying this, and I've said it for 6 months. I don't know why anybody's interested in gold at all since April. Ugly chart, 1, 2, 3, 4, and if this doesn't break to the upside, it's now looking like 26.5, maybe doable on GDX. JNUG, oops. Same pattern. If we don't hold here, we're looking at 25. So when you look at JDST, excuse me, Dust, the Bear Gold ETF, looks a lot better than the other ones, doesn't it? And look at the JDST, nice uptrend. So checking out silver, not much better. So folks, and you look at some individual stocks in that group, both gold and silver, nothing to write home about. And I'll tell you right now that there'll be a time for them, and it isn't now. So that's pretty much the ETFs I wanted to show you for today. Let's get to it. And here's the stocks I think look great, but some don't. And I want to point out the reason why some of these are in here is there are stocks of interest in this group that we've been trading and are swinging that are not looking good. AAOI, a perfect example. Everybody thinks this is the next AEHR. It broke out, it ran out beautifully. We've traded it nicely a couple times, but look at this rollover. Break of the trend line, break of the lateral price support, break of the moving average, and then this, the 7-day bear flag. If you're going long this stock, you better be ultra careful. I would rather be short. Quite frankly, I think it could be a $6.5 stock eventually. It depends on the market. But negatory. ACIC, look at this. A lot of these little insurance companies, suddenly new American Coastal Insurance. Never heard of it. But a year ago, the stock was 30 cents. Recently, 8 3/4, nearly a 30-fold increase. And check it out, it's flagging or coiling. Now, I don't know what the reason why some of these insurance companies are looking like this, but my target is 11 and 17, 18 if this thing really goes like it can go. Could be a double or more. AEHR is another one that we love, but folks, this is broken. And if it breaks this line, you can kiss it goodbye. Be real careful. Support at 39, you break that, you're probably looking at 34.5 or worse. This is a bull flag breakdown with a gap underneath support, and it's in jeopardy of breaking the entire trend line going way back. Take a look at that. So be ultra careful with AEHR too, just because we liked it and loved it at times, and even as recently as a week ago with this bull flag in here, thinking it was going to break out. That's why you have to react, not be fixed in your mind and stubborn about things. Things change, and you need to change too. Affirm. Again, double top breakout, looking awesome, was running, and then suddenly the market brings it back down to support. Stop under 18.5. AI has been terrible ever since it broke this double bottom and across here, back in about 32. It's now 24. Next key support, 20, and believe it or not, 16. All the way from the spike high, 48.87. Again, looking phenomenal in here like a wedge, but it broke down. Then it formed a wedge and broke down. Look, until this reverses, it's going lower. AMD, similar. Multi-wave up, breaks the trend line, snaps back to it and fails. Look at the moving averages here. Unable to get back above the moving average. When it does that for a month or two, you're probably going to roll over. And AMD is rolling over. And with semiconductors vulnerable, this could be an $80 stock. On the bullish side, biotech or drug stock Amneal has been a phenomenal uptrend. In March, how about $1.25? By August, 4.75. So basically 300% increase, and now a bull coil. I will admit, last week we had 4 negative days in a row, but it never hasn't broken down yet. And if it does get above, say 465, 5.75 and 6.75 potential targets. APLS. Okay, so it popped out. We put a flag and we put a buy on it. It ran from about 38.9 to get as high as 51.54, reaching my scalp, my swing target. Now it's pulled back. The angle may have changed as well. I'm going to change it to look like this now. And there's why. I think that is the actual angle. However, when you see the pullback in your Drury trend line, you have double support right beneath Friday's low. So you break under 43, you may see 36.7 pretty quickly. You may even fill the gap to 34.5. Be very careful with APLS. APLT, Applied Therapeutics, thinly traded, but really starting to pick up volume. Broke through a double, triple top last week and just kept going. Now it's at resistance here. But we may see the stock make a bigger move at some point to 6.5, my next target. That's a swing. 6.5 could be a beauty. It's a beautiful chart. Look at the underlying technicals. In this market, that's relative strength. APP, great chart, coming down hard at support. This is an X-rated swing as well. Here it went from 37 to 45 nearly, and then pull back. 45 with key resistance across here, see it? It's vulnerable to a bigger and deeper slide to at least test the gap down about 33 if it breaks here. AUGX, rising channel, lateral coil type of pattern. The potential is 7, but it's going to take a better market. BRBR, this consumer products company, packaged foods, bell ring brands. What a chart. And look at the flag. I mean, I'm looking at 50. If this thing continues, and the market permits it. Kaba is a stock that from a year ago trading at 50 cents, spiked up recently to 19 and 34 cents. Now pulled back down, but it's holding up very, very nicely in a lousy market. Another relative strength biotech. At CAMT. In January, under 20. Right at 20. And by September, 61, a triple. And now flagging it yet again. I can see 70 in this stock easily. And the uranium stocks are strong. Look at the multi-month, more than a year, I should say, consolidation in CCJ and then a breakout. The run now on this one is taking this to the highest level we've seen in 12 years. That target is 44, and that's my target short term for this stock. CDLX, inverse head and shoulders, tech created swing. It worked out great, but it's come down pretty hard, particularly on Monday when it plunged from 19 to 16. And by Tuesday, traded to 13.91. Any move under that, and the stock is done. Be careful. I'm amazed how many coal stocks are doing well. Look at Constellation Energy. It says utility power producers, but what I understand is a coal stock per se. I'm sorry. I'm wrong. I was thinking of CEIX. CEG is, in fact, a utility energy producer, and look at this chart. I don't know if this can go to 140, But longer term, that's the projection on it. Great chart there. Here's the stock I was talking about. CEIX Consolidated Energy isn't a coal stock, which traded down in the 3 range in 2020. It's made it up to 94. That's a 30-fold increase. After consolidating in 22 and 3, it finally broke out in August, and it's been running beautifully ever since. The new all-time highs. Sky's the limit. Blue skies on this one. Check cap. I wanted to show you the possibilities because when you see a stock having 4 consecutive bullish days in a lousy market, you should always pay attention. Relative strength is solid there too. Target 5.5. Court, another inverse head and shoulders spike out, break through a double top, and now pulling back. But it's got really good technicals. I like this chart. Be careful though. The stop will be under 29.5. Core, big base and a breakout. You can see a long decline from the high 50s down to the single digits, and now look at this beautiful recovery. Breakout, wedge, and pop, and now another one. Looks higher to me, $20 target. Kinetics, big base, huge breakaway gap. You may remember 2 weeks ago. I put a swing on it, I believe. I have to double check my numbers, but that I should be because that's a dynamite looking flag type pattern. Next target 33 and 37. CRS, formerly Carpenter Technologies. This is the steel stock. What a great chart. Mid-20s to low 70s and still moving. 75 target. Carvana is one of those stocks that had one hell of a move. As you know, a year ago it was trading in the 3-4 range. We got it up in the mid-50s, but it's come down hard for 6 days in a row off the double top. On minor support here, but it's vulnerable down into the 35-36 range. CWCO, Consolidated Water, great chart. 14 to 31, target 37. DBI, breakaway gap, run up, flag, breakout. We put a swing on it. It pulled back and formed a little wedgie and broke out. Had a reversal day on Friday, but if it gets to 13.5, 16 is your target or more. Dell Computers, fabulous earnings report. They exploded it and now we're flagging it or coiling. Bottom line is, in a lousy market, a tech stock doing this is something to pay attention to. Could be an $80 stock. DraftKings, one of my swings since back in here in the low 20s, it made it to the mid 30s, pulled back and bounced, it's pulling back yet again. Some key support just underneath here, trend line as well. So we don't want to see any further downside in this one, or it may be time to step aside periodically. ET and the oil sector, several stocks look like this. This one has upside, I think, to high teens. ETON, base, breakout, pullback retest, pop, pullback retest, pop, and doing it again. But it is within a rising channel. As long as it holds 4, I'm good. Target 6 3/4. Engineering construction firm Fluor has broken through quadruple tops and backed up a little. But if it extends, I'm looking for 44. Another relative strength stock is Fabrinet. I believe a security software stock. Maybe not. I'm looking. No, that's FNT. Yeah, this is a electronic component stock, Fabrinet. But look at this chart. Breakout across key resistance with a big gap, a flag, and now a pop. Target 175. FNGR, as you know, we traded it here and here, and I put another swing on it there. It ran up, got up over 8, a new high, but then backed off at the market. Still, as long as it holds 4, I'm good with it. My target eventually is 10. FTI, oil and gas equipment, rate chart, broke out in October of last year, around 8. It's now nearly tripled by getting up to 21.67. It's flagging. Next target is 24. Oil stocks have great relative strength. Getty, well, a nice long base for about a year now. And this breakout constitutes a very sharp move in a lousy market, but there's a double top ahead at 8 1/4. It gets through that, I'm looking at about 18. Groupon, 1, 2, 3, 4, 5 waves up and a wedge coil, but maybe I think I'm counting that wrong. It could be 1, 2, and then 1, 2, 3, 4. Yeah. The next target is 16 and 20. If it does go, it's got a nice pattern and it's holding up beautifully and headed up there on Friday when the market was down. G-Tech explodes and wedges. Something to watch. We get to 5, it could be 8 or 9. Hudson has been strong for a couple, 3, 4 years now. Ever since it plunged in 2019, it got down to literally 30 cents. It's now made it up to 13 plus before pulling back. That's good momentum. Helix in the oil and gas services group at multi-year highs. We get through here, we're looking at blue skies in 17. HNRG, a junior coal stock. What a great chart. Broke out of a coil and is extending. Target is 14, 18, and 20. HPK, a junior oil stock, came out of a down channel, popped the resistance, backed off, and broke out on Friday. Looking for more, 20, 20 and a half target. DYA Biotech, breakaway gap and wedge, and then a stair step its way up before the pullback, very orderly. Then it popped out and flagged and popped again. Now it's pulling back. But any move out of here could get this into the mid-30s. Iron Mountain breaks out of a multi-year wedging type base, runs up and retests and pops some red flags. Beautiful long-term chart. You can see the long-term chart targets mid-80s. My target 75 for now. LFMD, breakout wedge, pop out, pull back. Look, the overall chart looks great, but this one's got to get above 5 with energy to get going. If so, target is 7. LI, the Chinese automotive stock, a long coil. Bullish in this environment, but again, underneath 38 must be a stop. If it pops, 44, 46, and 50 targets. LPG, another oil and gas stock that's just phenomenal. I got a 34.5 target. LTRX exploded. We put a swing on it. It pulled back. Had a bullish engulfing reversal day Friday, but it's thinly traded. Very. I need this to get over 545 first. That's when I get more excited with a target of 6.5 and 7.75. Lights. The tech trader swing when it broke out. It's now consolidating a beautiful flag and holding up very well. Thank you. Had a nice up day on Friday in the lousy market. Target 16.5 and 18. MDXG breaks out of a base with a breakaway gap, forms a flag. That was very bullish. Then popped the flag, then popped, and it's got a longer one now. It's more of a coil. If it should get above 8.25 or a half, the target's 10. MIRN. Nice channel developing. Targeting 35. Just came through a double top here. MLTX, now a 2-month consolidation of the big pop it had in June, 3-month consolidation. You can see what happens if it breaks out. If it does, mid-70s and high 80s are possible. But support, and this is key, you need to hold 49. MNSO, pop, wedge, flag, long consolidation, breakout, flag, breakaway gap. I mean, it's one of those charts that just keeps giving. Not going to be surprised if this stock makes it through here, runs up and retests the all-time high up in the mid-30s. MOD, wonderful rising channel, and bullish coil developing, targeting 54.5. MRTX, 2 good days last week in the midst of a plunging market. Now, if this gets above here, I'm looking at 50, 55. And TRX, beautiful run up, spike, wedge, pop, little wedge, and pop again. This looks like 11.5, 3/4 is coming. Little NN popped out, wedged, popped out, and retested. Target 7.5. Nutanix, one of my favorites. Breakaway gap. I put a swing on it. It popped in and backed off, but held the gap so far. Again, 3 consecutive up days during a down market is always a good sign. My targets are 36, 39, 41. NBT, beautiful long-term channel as well. Recently moving nicely, targeting 65, support 51. Another oil-related stock, Oceaneering, broke out, wedged, popped from the little flag, and then went again. Target is 28. PAY, breakaway gap and wedge and pop and go. I think my target has to be 18. BCBX, big base, breakaway gap, pull back and retest, pop out again with a breakaway gap from the falling wedge. Above the moving averages, we're consolidating now for 3-4 months. Any move above 50, mid-50s could get you into the low to mid-60s. PET, IQ, PETQ, breakaway here, running channel there. I'm looking for 24 3/4, 25 on a test. PFIE exploded in August and September, pulled back sharply Friday, but what a nice reversal bar. It should stop under 235.40. The targets are 3 1/4 and 4. PHVS breaks out, runs up, spikes, and pulls back and forms a coil. If it holds support, and right now it's stopping under 1690, if it does hold support, I would retarget 23.5 and 26. POWL with explosive move, put a swing on it. It ran up nicely and backed off for several weeks now. It's coiling. Now it's holding, and it can very easily be a $115 stock if it doesn't break down. Stay tuned. Qualis breaks out of a base, pops near resistance and backs off, and breaks out again, and now it's forming a flag. Obviously, it needs to get through 162. That's my near-term target. You get through that, it could be high 170s and 80s. Really good-looking chart, especially in this market. Quick, in the semiconductor group, exploded and now wedging. Anytime I see that with good technicals near the apex, I keep an eye on it. A pop above, say 9.5, can get this to 12 pretty quickly. REVG, breakaway gap, flagged and exploded. Target 17.5. Ryovant, which is one of my top picks of the year from back in December when it was single-digit stock, has more than doubled, but then pulled back. It's right on support. Retargeting 12.5 and 14. Rhythm, you can see broke out and platform, but it did pull back. Now, kind of has support just beneath here at 22. Your target is 27 and 32. That's CS. Nice earnings report. It broke out, holding up beautifully. My target is 12.5. Sapiens, the software stock, pop flag. Looks to me like a 1, 2, 3, 4. Another wave coming could get you into the mid-high 30s. TAST restaurant group, breakaway from a base, coil pop, pull back and pop again. 8 and 10 are targets. TATT, an aerospace stock that broke out flagged and now is moving, looking for 10.5. TBLA popped out, pulled back, we put a swing on it. It did work out, but it took a while to get there. Now, if it can break out above here, above say 390, I'm looking for 4.5 and 6. Tidewater in the oil group, what a great chart with a target of low 80s. TH, Target Hospitality, was a wonderful stock last year when it went from under $1 to the high teens. Since then, for almost a year now, it's coiling. Watch for a breakout. If you get one over 16.5, you can start to see this explode. It's that kind of stock. TIGR, Chinese asset manager, breaks out and flags. This is a nice setup for more. Double top at 5 3/4, you get to that. 7 and 8 are targets. TNGX exploded in August and wedged, and now has run up beautifully. Breaks out of the wedge, moves from 643 over 10. Target is 11 3/4 and then 14. TSAT exploded. We put a swing on it, it backed off and then ran hard. Now a beautiful tight falling wedge near the apex. Key support 13.5 3/4. Resistance and target 18 and 22. Tasha, breakaway gap, pullback, nice setup, then ran hard and now it's coiling. Target 5 and 6. TTI, long-term breakout, rising channel, targeting 7.5. TXT popped out 3 days ago. We put a swing on it, strong earnings report. It backed up, but it's holding Need this to get over 81, then you're looking at 85 and 90. 88 and 98 are the swing targets though. ULBI popped and pulled back, popped, and this is when we put a swing on it. It's now consolidating again. Your support is 8, your resistance 10 3/4, your target's 11.5 and 14. Another uranium stock, UUUU, is broken through a double, triple top. It's consolidating. Friday was a good day for it. On a bad day, up 7%, targeting 11. VIRC breaks out of a double top and multi-year highs. Strong day on Friday as well, up 11.7% on Friday. We get through here, we're looking at 7.5 or 8. In the oil and gas group, Vista, beautiful rising channel continuing, targeting 32.3. VRT, what a chart. Accelerated in May when it was trading at 12 and it made it up to nearly 40. It did do 40.41 at the high and now flagging. Targets 45 and 55. VST in the utility group, beautiful chart. Breaks out of a base, flags, and now flagging again, 36.7 target. Western Digital is doing great in this market. And on Thursday, hit the highest level since 52-week high in this market for a tech stock. Pretty interesting, huh? My target's at 51 and 55. Little WVE was a former swing of mine back in here. I forget where exactly, but it's coming on nicely with Friday's break to another new, let's see, 6-month, 7-month high. I have a target at 7. Weight Watchers came down off a key resistance level, but it's holding support. Something to watch, especially through 12.25, 35. Then it's looking for 17, 18. U.S. Steel popped and coiled. It's in play, probably a takeover. I'm still looking for a 36 to 39 on a takeout, probably by CLF. XPEV, another 1, 2, 3, 4, 5 in Chinese electric vehicle manufacturer. We did well with it there. It pulled down and popped, and that's got a long couple-month wedge for me. Do not want this under 15. Your targets are 20, 23, and 27. XPO Logistics, my favorite stock in the transportation group, has moved sideways and it's still holding support and allows the market with a target of 90 if the market turns. And that's it on the long side. I got some bucks of shorts to show you. Quite a few of them, about 3 dozen. Starting off with AMPH. Folks, anytime you have a stock that runs up like that, 25 to 70, reverses sharply and forms a bear wedge, that's where it's a short. Came down, it formed another bear flag. I'm still short. Now looking for 40, 41, and 36. AN, after a big run up, comes down hard and forms a big bear flag, might be breaking it. Targets are 139, 128, and 121. PLDR, one of the strongest stocks on Wall Street, which went from 50 to 160, came down and bounced. Now it's come down and broken the neckline and trend line. So my next support is about 110 and 100, and those are your targets. After a big run up on BMEA, it also broke hard from the bear flag. We were indicating short this at 22. Went down to 13 and bounced. Still looks lower to me though. Lousy technicals. CPA, breakdown, snap back to resistance and the trend line right there, and then roll over hard. There is support beneath here at 85, but it looks like wave 3 and then 4 and 5 could ensue, taking us down into the mid-70s eventually. Crocs, one of our better swing shorts, came down, bear wedge, and then from the 103.4 level, dropped down to 88 from the bear wedge, dropped down to 85 and change, and it's right there. My target's on the Crocs right now, 73.4 and mid-60s. DHI home builders, as they start to roll over, the trend line breaks here, the bear wedge forms there, head and shoulder top, breaks the neckline. There's some support right there, 104.5. We break that, looking at 95. Thick sporting goods. Lord knows why I haven't shorted this one. Look at that bear wedge. Plunge, form a bear wedge. 105, 97, 88 are targets. MDOX breaks this trend line, forms a rising bear wedge, and starts to roll over. Well, this tech trader, I believe it's a swing short, but the target's 80 and then 72. DT comes down, breaks the trend line here, forms a bear flag there. Now it hasn't broken yet, but if it does, it could plunge to 40. DXCM, love this one. Plunge down after a big run up, plunges, bear wedge, and then this bear wedge is where we really got short. 1078, traded at 87 on Friday, near the target. Next target, 80. 5 below, big massive roll over the top or head and shoulders, whatever you want to call it, broken the neckline. This could very well drop to 130 or 115. 4, topped, came down, is formed the bear flag, as you can see. My target is 44, 37. GRBK is a tech trader swing short after breaking the neckline and bouncing and failing. It's rolled over from 50.5 to 40.5. More downside to come? Perhaps. HCA, head and shoulder top breakdown, looking ugly. Targeting 240, 220. HOLX, head and shoulder top breakdown, big bear wedge, and coming down. It did bounce Friday, but ultimately this could be a $58 to $60 stock. INTA, tech trader swing short. Look at that bear flag, and it's breaking down. First target, 29. Second target, 25. INTT, also tech trader swing short. Came down from the bear wedge, came down for a beautiful bear flag, and now it's drifting lower. Target, 13. KBH, another home builder with a head and shoulder top, breaks its neckline on Thursday, inside day Friday. Next target, 42.5, 39. Las Vegas, massive head and shoulder top, breakdown bear flag, break from the bear flag. Next target, 41. LW, massive rising channel, breakdown bear flag, breakdown rising bear flag, roll over to test support. If it cracks here, heading to 86. OMC, top pattern broken, little bear flag formed, came down from another rising little bear wedge and rolled over to the target. Next targets are 68 and 63. PI, hammered, big rising bear wedge, fails right at the moving average, comes down and forms a beautiful bear flag and gets hammered. Forms another wedge, gets hammered. Now, it wasn't engulfing bullish bar on Friday. Didn't close well, though. We'll see if it has more to go on the downside. Looks like a 1, 2, 3, 4 to me. Downside potential targets, 40 to 42. Race, a new tech trader swing short possibility. Big run up, as you know, we were short this stock here when it plunged, but now thinking about doing it again. We break 285, targets at 270 and 258. RDNT, RadNet has a head and shoulder top and a breakdown. Possibly support right where it is. Next targets are 25 and 22 3/4. Rambus came down, plunging to support and rallying back, but it's maybe failing. A little too strong for me. The underlying technicals look lousy. I think it goes down. 48 and 41 are targets. SDGR drops down hard with a breakaway gap and forms a bear wedge, and it's been down every day since. Literally for 3 weeks, 37 3/4 to 29. My target was 26.5, 7. We're getting close. SMCI, a new short, obviously the darling of Wall Street, 31 to 300 and some odd, 10-fold increase, but then this plunge and this bounce and that bear wedge is where I said this is short. It subsequently plunged from 280, Thursday's low of 228. I don't think it's done. 210.12, 195, where the big gap is, are your next targets. SYM, big run up, spike up, pull back, bear wedge, and it's drifting below the neckline. It looks to me like a $22 stock coming up. Technoglass, one of my favorites, and tech trader swing long. Finally broke here and bounced, and it looks to me like this is a negative pattern. The stock could be headed to 26, my next target. TMDX also broke, came down, failed at resistance, formed the bear flag, and dropped hard. Next target, 45. Alta, a brand new tech trader swing short. I gave it to you, I think, on Thursday at about 409 or something. Closed at 399, down 5 points on Friday, and looking like it can go much lower. My next target is 380. 365 and then 345. That's a look at it. Lots of shorts, but still some good looking longs and a volatile market. That's where we're at, folks. I want you guys to really keep this in mind. Review this, I should say. There's a lot of information that I took a lot of time to develop for you. So make sure you're prepared for next week, and we're going to need it. Have a great rest of your weekend, and I'll talk to you later. HB out. Bye-bye.